one of the many projects that I got involved with was called the XDC network, which is a fork of Ethereum. But in essence, it has everything that Ethereum has, but it's everything Ethereum wants to be. The next generation model is adding the digital assets in the messages payload.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, this is going to be undeniable proof that they are for a fact mentioning and discussing and talking about the utilization of digital assets in this new financial ecosystem. We're going to be particularly focusing our attention on XDC and the XDC network. So if you all are XDC holders, do me a favor, smash that thumbs up button and subscribe. Let's jump in. So much phenomenal information to share with you all today. We're going to first play a series of video clips before we jump into the documentation. Do you remember on a panel discussion back in November 2023 of the managing director of the IMF going on to confirm that regulations are not here to crush crypto and that digital assets in crypto are not going away?
We must consider the effects if crypto assets become widespread. The scenario is not far-fetched. They may. For one, they are certainly not going away. These rules are not meant to return us to the pre-crypto world, nor to squash innovation. Neither is crypto all tainted by fraud.
Now, interestingly enough, in previous video breakdowns, I've also shown you systemically important individuals and large organization representatives go on to confirm that we are going to live in an ecosystem, an interoperable ecosystem where all these forms of digital money are going to coexist. Stablecoins, CBDCs, cryptocurrencies, all forms of digital money in the future will coexist.
And I think as we start to see central banks understanding, one, if they should even issue a CBDC, right? So we hope they're also outcome driven. And if they decide to, what are the design choices they're making so that those CBDCs are interoperable with stablecoins, with cryptocurrencies, with the multitude of wallets that Dave will talk about in the future.
Very interesting to see CBDCs as a complement to other forms of private money. I don't think we'll have just one form of digital currency in the future. We'll have many and they'll have different strengths.
Now, this is an updated document from 2024 labeled from the International Monetary Fund, digital money cross-border payments, just to confirm a couple of things. Remember, we're not making any of this information up. You can see January 2024. Now, again, shout out to the CYPRX researchers for the vast majority of this information. People will just scan these documents and look for particular digital assets, but that's not the focus we want to orient our attention towards, okay? So remember, the previous panelists, IMF director confirming crypto is not going away. Keep that in mind. And then the panelist, because I'm going to play another video clip for you guys of the reputable individuals from different large banks and organizations confirming that these digital assets will coexist in the future. Okay, it says right here, the rapid advent of digital money and assets, DMs, right? That's the abbreviation, raises questions about its implications for the function of the international monetary system. So let's clear up what the DM is, right? Because a lot of people say, oh, you're just talking about digital money. No, I'm going to physically show you that they are talking about cryptocurrency. Okay, it says right here in the introduction, we are in the midst of a digital revolution. So if you're not going to believe us here at CYPRX, maybe you'll believe the International Monetary Fund, literally telling you on the first note of their page that we are in a digital revolution. Although digital technology has been used in finance for some time, recent advancements in connectivity and network development together with the emergence of distributed ledger technology have spurred the development and proliferation of new forms of digital money and assets, again, DM, with private and public, including central bank digital currencies, e-money, and crypto assets such as global stablecoins, as well as security and utility tokens. And right here, it references box 1 and has a little 1 dash next to it. So I highlighted that in red. Now, if we scroll right down here and we zoom in, it goes on to say, in this paper, unless stated otherwise, the initialism DM refers to all forms of digital money and digital financial assets. So again, reiterating back to what I just mentioned to you guys, they are for a fact talking about this broad digital asset class, this ecosystem as a whole, not just particularly focused on crypto, but yes, they are also talking about crypto. Let me further the case. Now, check this out. Right down here, you can see right in this highlight, it says crypto payment system, right? Integrated with the financial system as a whole. Okay, you guys can see from intermediary, bank A to bank B, right? Most likely utilizing some type of distributed ledger technology in between. In sum, this analysis suggests that improvements in payment efficiency can significantly affect international adoption of currencies for trade and financial transactions. The introduction of new payment technologies such as DM, including CBDCs, could thus lead to more international adoption of these, plural, new forms of money, further spurring global interconnectedness. So remember, DM, what fits in that category? Stablecoins, digital money, crypto assets, CBDCs, right?
Let's briefly speak about the innovation continuum. I really like this chart because this chart illustrates the way of any innovations in human history. So we can take, firstly, some simple example, like mobile phones, right? So initially it was impossible. Like 30, 40 years ago, it was totally impossible even to think that we will all have such powerful mobile devices in our pockets, right? After that, it became practical. They were heavy, they were big, batteries were just very bad, coverage was very bad. But thanks to guys like Nokia, it became possible, right? After that, it became expected, and now it's 100% required. We can take another example from banking industry. We can speak about cards, of course, but maybe it's better to take an example from, let's say, contactless payments, like Apple Pay, right? Long story short, even like 10 years ago, it was impossible, but now it's required. So any retail-focused bank actually must have now contactless payments, right? And support Apple Pay and Google Pay and these kind of tools. So now, speaking about crypto, I believe that we are here. We are already at the expected phase, right? So customers of traditional banks already expecting to get digital assets, already expected to get an access to crypto, right? And I'm sure that tomorrow it will be absolutely required.
As discussed earlier, digital money could present an opportunity to generate benefits from lower transaction costs and greater financial interconnectedness, which could lead to greater diversification of risk and import gains from market integration and stronger trade relationships. Now, we're going to capitalize on stronger trade relationships right there by focusing on the XDC network. Now, let's move over to these fundamentals right here. This is from Yoda Plus. And this is actually from 6 months ago, but I want to pay attention to detail. And it says, as the trade finance sector evolves, adapting is essential, right? Remember, we've talked about financial institutions that don't adopt these technologies will most likely fall behind.
So the most maybe advanced institutions already adopted digital assets. So some illustrations, again, PostFinance just recently announced that in collaboration with the Signum, open an access to crypto offering to millions of its customers, right? Another good example, collaboration of Amina Bank, ex-Seba Bank, with St. Galler Cantonal Bank. Again, don't get confused, we have other cantonal banks here, it's just an illustration. So another good example I like is Raiffeisen Bank Austria. So this bank implemented crypto offering based on partnership with Bitpanda, a regulated exchange in Austria. So, and we have many more examples, like Societe Generale, Forge, collaboration with Metaco. UBS is actively working with the tokenization of assets, right? Citibank is actively working with digital assets. Visa in collaboration with Circle and not only. And the good part about this slide is that we're not speaking about slow development of traditional institutions. As you can see, it's all based on collaborations between traditional financial institutions and blockchain native, crypto native companies. It's a very smart move because blockchain native companies and digital asset banks already spent years for the development of the technologies. And now they're sharing these technologies with others.
Yoda Plus DocuTrade aids in transitioning from paper-based to digital practices. Now, This is an XDC partner, and I want you all to pay attention where in the background right here, it says 100% liquidity in 6 steps. Well, in a panel discussion from just a couple of weeks ago, a gentleman goes on to confirm that liquidity is extremely important and goes on to also confirm that we will operate in an ecosystem in the future moving forward where all these blockchains and cryptocurrencies will all coexist. Take a second and listen.
So another important piece of this puzzle is liquidity. So to start this business, you have to use integrations with liquidity providers. Again, it's all about support of multiple coins, multiple blockchains, making proper connections. Staking is the important part to consider, right, when it comes to liquidity. And of course, it's about integration with fiat flows. So crypto would not work without traditional assets, right? So in order to provide crypto services, you have to make sure that you have proper bridging between crypto and fiat.
So now that you've heard that gentleman mention the importance of liquidity, right? Here it goes on to say, this is from October 30th, 2023. Pay attention to detail. Remember, again, Sunil Senapati standing in front of a organization, Yoda Plus, with a freaking sign that says 100% liquidity in 6 steps, okay? Now check this out. It goes on to say, XDC Trade Network has achieved remarkable milestones of facilitating the conversion of paper bills of lading to electronic bills of lading through their innovation solution in the first ever transactions of its type in close cooperation with its ecosystem partners. Right here it goes on to say, this is the first transaction ever XDC Trade Network, which showcased how liquidity can be availed from an alternative financier by tokenizing a real-world asset. TradeFlow Capital shipper was able to raise liquidity as soon as the ship sailed.
So another important piece of this puzzle is liquidity.
Wow. Right? Now, these are direct quotes from trade transaction participants. Here it goes on to say, this is from Tom James, the CEO of TradeFlow. This pilot transaction enabled us to digitize a paper bill of lading on trade trust from the IMDA Singapore government and escrow with a MAS regulated custodian. We further tokenized this EBL and fractionalized the same on the XDC Trade Network. We raised capital for 1 token, fraction of the value, which was very helpful in unlocking liquidity for the cargo transit period. Wow, another mention of liquidity. Now, by developing the best of the technologies and using the document standards from the ICC DSI, we are able to provide, this is directly coming from Sunil Senapati, the CEO of the XDC Trade Network. We are able to provide a digital solution for cross-border trade and provide 100% liquidity for these trades. Ladies and gentlemen, this is absolutely massive. Go ahead and smash that thumbs up button if you are an XDC holder. I mean, wow, devil's in the details. You got the IMF telling you that cryptocurrencies are not going away, that they're going to be integrated into the new financial system directly on 2024 PDFs. You have reputable individuals telling you how important liquidity is, and the same thing that the IMF papers are telling you, that we're going to operate in a system where these cryptocurrencies will coexist in a digital money fashion moving forward. Then you have documentation right here and direct quotes from reputable individuals telling you that the XDC network can provide 100% of liquidity for these trades. I mean, it's insane what's happening right now. Last but not least, we're going to go into this event that's coming up the 16th of April, 2024 in cooperation with the ITFA. Now, why am I showing you this in collaboration with the XDC network? We know that the XDC network is the only layer 1 network that is a member of the ITFA. If you go right down here, you click on their membership directory, you can scroll to the bottom and you can see the XDC network being the only layer 1 on this members list. Now, the agenda is the most important highlight here, okay? So let's zoom in, and it goes on to talk about, is tokenization a real option for providing liquidity and a realistic opportunity for investor markets? Distributed ledger technology can be used to repackage and fractionalize trade finance assets through tokenization. Tokens can represent either an individual asset or a part of a fund share, transforming trade finance instruments into digital assets. Tokens has the potential to open up the purchase of a trade finance asset to a much wider market. Boom, right? So just listen, okay? I'm going to blow your freaking mind if you're still here. Remember, the document from the IMF Okay, let's just go back so you guys remember the interconnected webs that are being built, where it went on to say digital monies could represent an opportunity to generate benefits from lower transaction costs, market integration, and stronger trade relationships, right? Okay, well, back to the document that we just shared. What are they attempting to do with digital asset tokens, i.e. XDC, that has the potential to open up the purchase of trade finance assets to a much wider market? Okay, now let's just take a break real quick and let's listen to the CEO of Impel, this organization right here, where on their website it literally says Impel's API payment rails enables banks, financial institutions, corporates to send ISO 222 compliant financial messages with optional instant settlement capability, i.e. through the accessibility of liquidity by using digital assets on the blockchain. They're literally utilizing XDC, ladies and gentlemen.
20022 API can't do everything the Swift or separate model can do. Think about if you're going to wire funds cross-border from bank to bank, you still use nostro-vostro accounts. You still use the central banking settlement system at the end of the day to settle up. That's all the same. But with Impel solution, you have a lower cost, operating cost than you would with their traditional providers, and you have your own peer-to-peer mechanism to communicate. So that's the easiest way for any existing entity to get involved. If they want to take it to the next level, our next gen solution. That's when we start adding digital assets in the messages payload for instant settlement.
If this video breakdown blew your mind, just like doing this research and putting it together for you all blew mine, where the devil's in the details, literally showing you all piece for piece how they are for a fact talking about the integration and utilization of digital assets in this specific example, the XDC token, right, to enhance liquidity access, to enhance payments, to enhance trade finance. Do us a favor, smash that thumbs up button and subscribe to the platform. What a phenomenal video breakdown showing you proof is in the pudding. Again, ladies and gentlemen, make sure that you're out there doing your research. The mainstream media is never going to put this information together for you all, but here at CYPRX, we're always keeping you all in the loop with updated information, showing you interconnected webs, and always showing you guys how deep the rabbit hole goes. With that being said, I hope that you all enjoyed this video breakdown. As always, many blessings, be cognizant, be aware out there, and I will see you all in the next video breakdown.